Hello, I'm thrilled to be joined today by Nick Gregory, CEO at CommerceBlock, a Bitcoin and blockchain infrastructure development firm based here in London. Welcome, Nick. Thanks for joining us.
Hello, Paul. Thanks for having me.
Absolutely. Can you just start off by telling us a little bit about CommerceBlock and what it is you do?
Yeah, so we've been around since 2016. We're very much a blockchain infrastructure company, very much focused on Bitcoin, and we've been building various solutions to integrate Bitcoin into enterprises and various retail apps as well, and scaling solutions.
Great. So yeah, scaling, I guess that's a hot topic. Prices up, adoption's growing, more people coming into the market, more activity on the networks, and congestion's building generally as activity builds. We saw the first phase of the ETH2 launch this week, or the upgrade. Triggered this week when it hit its threshold for deposits into the deposit contracts, which will start the process, a 2 or 3 year process for fully migrating the Ethereum network over to proof of stake from proof of work. And I guess Ethereum was inspired in many ways by Bitcoin scaling limitations, lack of throughput, and lack of composability, as it's termed now. So, we've had, and I think you were working on some of the early proposed solutions for scaling Bitcoin. I guess one of the earliest was sidechains. That's something you've been working on, have been working on, along with companies like Blockstream. Other scaling solutions on layer 2, like Lightning, and still hold much promise, but there's still much work to be done there as well. And more recently, Bitcoin, the proposal for another Bitcoin upgrade, which would introduce Taproot and Schnorr signatures, if that proposal is adopted, should also see some kind of efficiency gains on the network as well. So I guess as a use case for these scaling solutions, things like clearing and settlement, for speeding up clearing and settlement and finality, has been closely looked at. So should we just start by looking at where we're at with some of the Bitcoin scaling solutions? So maybe if we start with sidechains, if you can just briefly explain a very high level what sidechains are, how they are proposed to work, and what work you were doing on them.
Sure. So, if you think of a blockchain, it's basically a database of cryptographic proofs. Unlike every database, it's finite resource. And a sidechain is essentially a data structure, a similar blockchain, on top of that existing blockchain, where it doesn't have the same kind of security constraints, it doesn't have the same throughput constraints, it's a bit lesser. So the kind of sidechains out there, you have Blockstream, which is kind of like a federation of members where people can move their coins into a less secure space but then get higher throughput. So basically, we've seen with Bitcoin that block size is limited, and it's premium real estate, premium real estate, and there's competition for that real estate. So by going onto a sidechain, you're essentially going onto another blockchain, but you're pegging from the original Bitcoin blockchain into a blockchain which is arguably relaxes a lot of those kind of requirements. So for example, on Blockstream's sidechain, it's not mined, there's no miners mining it. It's basically 15 federation members of a federation that are approving the blocks. The work CommerceBlock did was basically have a private sidechain for the institution where Bitcoin could come in from the main blockchain and be pegged into this private sidechain. We actually never worked with Bitcoin in that sense. We just used Bitcoin's proof of work to secure it. And then we worked with companies that wanted to do things like secure gold or trade gold on that sidechain. But that's the way to look at it. But interestingly, what we saw in the last year is that, in a weird way, Ethereum became a sidechain to Bitcoin. A lot of, you probably heard of wrapped Bitcoin, but in the DeFi movement, the DeFi use case, a lot of that was basically Bitcoin wrapped in a kind of Ethereum construct to be traded inside of Ethereum. So you could argue and say that Ethereum has become a sidechain for Bitcoin because of DeFi, etc.
Is that because ultimately with wrapped Bitcoin or Bitcoin which are being used on the Ethereum network are basically under the control of a third party or a federation of third parties?
Yeah, so you have a multi-sig, people peg in their Bitcoin into a multi-sig, which then issues a wrapped version of Bitcoin. And I think that happened because a lot of the DeFi use cases, they wanted an asset that they could trust or they liked. And of course, I think the most popular asset was probably still USD Tether. But then I think at one point up to $2 billion was actually locked up in wrapped Bitcoin. So, you know, it really did become a scaling solution in a way for Ethereum, for Bitcoin.
Sure, but these things aren't, to be clear, fully decentralized. There's always some level of trade-off between efficiency and security.
Correct. So none of these side chains are arguably truly decentralized. You're always trusting either one person or a group of people. So whether that's a federation, and you know, you have to trust that, you know, the members of that federation are honest, or I think with wrapped Bitcoin, it's essentially just one custodian that you have to trust. So it's not decentralized, correct?
Okay, so what about the Lightning Network? How does that differ? What is that solving versus something like a sidechain? And what are the trade-offs there?
So Lightning's, again, going back to a database analogy, is more like a cache. It's a cache of, you know, transactions that sit on top of the blockchain. And, you know, I think the way that they call it is payment channels. So I basically can take some Bitcoin, lock it in a payment channel, and then, you know, send off-chain transactions to, say, yourself. Now, there's a lot of complexity there. Like, I have to, the transaction has to be routed to you. So there has to be a network of nodes which are willing to route. And that requires quite a lot of liquidity to be locked up, because to operate a node, someone has to run a node, lock up liquidity to allow that transaction to go through. And at any point in time, I can then close my payment channel, and that will basically settle on the Bitcoin network. And there's some limitations, like there needs to be a network operating which has, you know, enough liquidity allowed. Also, my node has to always, my kind of Lightning payment wallet, it always has to be running. So I have to always be online. So there's constraints. But it, you know, it's been a slow journey with Lightning. I think, you know, one of the issues with Lightning is probably a human thing, in that many people don't want to spend Bitcoin at the moment. You know, it's kind of gone into this kind of store of value mode. But there are small use cases around micropayments where you're starting to see it, you know, prop up. And, you know, it's a complicated project, but it's slowly gaining that liquidity, but it's been a slow journey. Also, the UI experience is a bit different, because you always have to have your wallet online. So some people have been using custodian wallets as opposed to non-custodian wallets.
Sure. And I guess that's always been a thing. You know, the argument for scaling has been to achieve more throughput, to enable kind of regular micro payments for general items, everyday items, for paying for your coffee and things like that. But I guess, as I said at the start, you know, really the majority of economic activity on these networks is trading related. So the other question that's arisen is like, well, you know, around the ability to clear quicker and settle quicker between trading venues. You have a lot of traders that are arbitraging. Ideally, if they could instantly move funds between exchanges, that would open up lots more opportunities and in theory create more efficient markets. Now, people have looked at, you know, we mentioned side chains, we mentioned Lightning. I mean, I think, you know, Blockstream's first use case for their network was to create a clearing network between exchanges. I'm not sure how kind of broadly or widely adopted that's been. And I think people were looking at something like Lightning that could also achieve those same objectives. And rather than looking at the micropayment side, look at instant settlement between exchanges and traders and brokers, etc., actors within that ecosystem. Do you think that's achievable? You know, is that is it something that could end up being adopted using side chains? Is Lightning the right technology for that?
Well, they all have trade-offs. I mean, one of the biggest trade-offs is you know, exchanges are very much the gatekeepers of the way people trade, and exchanges don't want people to necessarily easily move their funds off the exchanges. We've probably seen that. I think the challenge with Lightning will always be liquidity. I think you're going to have a lot of liquidity locked up in payment channels to move that amount. Side chains is going to be adoption, and also with sidechains, it'll never be instant. You're even with a kind of like a federated sidechain, you're still going to be looking at 1 or 2 minute block times. And again, it comes down to adoption. You're going to have to get you know, multiple exchanges agreeing to a certain adoption. I think what we've really seen is batch settlement, but I think things will change when the Bitcoin price goes up. I mean, in terms of like transaction fees, we haven't seen the Bitcoin transaction fees of 2017 yet, which I think were around, you know, $30. I think I remember in 2017, I may have done a few transactions that were over $50. At the moment, you can still do most of your work for $5. But with a bull run coming, you know, I think people are going to start to look at that, because it's going to be very hard for traders to kind of like arbitrage across different exchanges and move instantly. And, you know, obviously at the moment, exchanges are basically relying on batch settlement. I think other things are going to have to come in. Obviously, I'm going to promote Statechains because that's something that my company is working on. But I think Statechains and sidechains are probably more likely to be the approach than say Lightning because of the liquid lock. I see Lightning as more a payment solution, maybe for micropayments, etc.
Sure. I guess as always, these things aren't a problem till they become a problem, and we saw it briefly in 2017, but you know, it dissipated quite quickly once the markets kind of slowed down and calmed down a little bit. But it will become a problem again, and fees will become an issue. And this, I guess, loops back to the debate over what the kind of the base chain is there for ultimately in the long run. Is it there just for kind of large kind of settlements between the key economic kind of actors within the network, say exchanges and clearing solutions, etc. And then the question is how much of that will be centralized, because at the moment, you know, the early vision of all of this was that everything would be decentralized and we won't need these kind of, you know, central intermediaries. And we're seeing that just be reinvented all over the place in crypto. We're seeing, you know, centralized custodians being widely adopted by the institutional players coming in because that's what they know and trust. But ultimately, you know, it kind of defeats the objective of the technology in the first place if we end up with kind of all Bitcoins or whatever crypto being held in these big central silos. So, you know, I guess the goal is to work towards something which is, if not fully decentralized, maybe mitigates counterparty risk better than we have today. And the idea of shared control or, you know, partial control over these assets is ultimately the goal. So, you know, we'll have to see how things pan out with sidechains, or whether, you know, future developments on Lightning enable us to achieve some of these things. Before we move on to Statechains, which is something, you know, a much newer proposition and quite interesting in its own right. Can you just briefly touch on Taproot and Schnorr signatures, which will, if accepted by the network over time, over the coming year or so, and adopted by miners, what will this mean? What are these upgrades? What is Taproot briefly, and what will it mean for the network?
Yeah, so as we've said, you know, blockchain is a finite space, and we need to, you know, we need to keep the network on, say, Bitcoin decentralized, but at the same time, we want to basically, you know, be optimal in how we use that space. So Schnorr signatures essentially allow us to compact by using a multiplication, compact a multi-sig signature into basically the same space of a single signature. So multi-sigs will end up being, you know, not as expensive. So, you know, we're going to save an amount of space there. Taproot is a kind of in a way, the best way to explain it, it allows complicated scripts to only reveal their kind of like their ultimate destination. So that's going to save space, and also that's going to allow more privacy type technology to be built on top. So I think what we're going to see once Taproot and Schnorr is allowed, we're going to see a lot more creativity in terms of smart contracts, ways to save space on Bitcoin that we have not seen before. And I think there'll be a few years of innovation that's, you know, going to get a lot of people excited in this privacy space in terms of the kind of smart contracts we can build in Bitcoin, which we couldn't do before. Potentially we could do kind of things like covenants, so like conditional payments, etc., that, you know, that weren't exactly possible. And that's going to be pretty exciting, I think.
Okay.
Especially as we start to see Bitcoin more used as a settlement layer. There's going to be settlement on pre-existing conditions and stuff like that. So
you'll be able to write conditions into transactions much more efficiently,
and not reveal them
as well.
Correct. Yeah.
Yeah. Interesting. So, not sure if that directly relates to Statechains. Yeah. If there, you know, is whether Statechains as a concept is dependent on that upgrade, or if you're able to kind of implement them now. But can you, for everyone that might not have heard of them or be aware of them, can you briefly explain what Statechains are, what the idea is around it?
Sure. So the original paper was written by a guy called Ruben Samsung, I think around 2018. But in his paper, you know, he came out with the idea that there was a lot of dependency on future upgrades to Bitcoin, which are not there right now, like Schnorr and L2. But funny enough, we never went out to build Statechains. We were looking at something called discrete contracts, which are a way of kind of doing smart kind of contracts on the Bitcoin blockchain. But one of the issues with them is me and you could say get into like a bet on the price of Bitcoin, and the problem is both our capital would be locked up in a private key. So we looked at things like Statechains as a way of novating that capital, novating your lockup. And so one of our CTO at CommerceBlock, he posted a message about how we could implement Statechains with today's technology on the Bitcoin mailing list. And before I knew it, CommerceBlock had committed to building Statechains. So that's how it kind of happened. But essentially, Statechains at a very high level is a way of transporting your private key to someone else. So obviously that sounds really simple. I have a private key which has a couple of Bitcoin in it. I can now give it to you, Paul, and great, you've got my private key. But the issue there is what happens if I remember the private key? I now can spend that money. So there's a lot of complicated maths to ensure that I can't spend that money after I've transferred it to you. So from a scaling point of view, it's awesome because now I can just move private keys around. But there does come with a lot of issues there, which we believe we've solved using today's version of Bitcoin. We use something called relative time locks. So there's a period of time where previous owners could not potentially take the Bitcoin. We have to do secure deletion. But one of the key things is it is non-custodial. It's not censorship resistant. So the state chain entity, if the state chain entity was to be taken down, I wouldn't be able to send you my Bitcoin anymore, but I would at any point in time be able to withdraw my Bitcoin. And that's why I think it's very exciting. Also, the transactions are all off chain. So if I have a state coin, I can send it as much times as I want. And there's no footprint, there's no imprint onto the Bitcoin blockchain. So it's very scalable. And that's why we're quite excited by it.
Yeah, so as a simple analogy, if people are aware of kind of physical hardware wallets such as OpenDime, which is basically a sealed private key where if you can pass it around, but obviously it would be clearly obvious if someone had tampered with that seal, and if that seal had been tampered with, then the private key could be compromised. So, it's not really of much use to you of taking it because the original owner could still have a copy. And so Statechains are essentially a digitized version or a digital version of that, where you can securely hand over a private key to a specific UTXO, which represents Bitcoin on the blockchain, and you can pass over ownership of that private key, securing the knowledge that, dependent on some level of intermediation, that can't be respent by the original owner.
Correct.
Very interesting. So as you said, this all happens off chain. So I assume there needs to be some level of intermediation. So there's someone that kind of adjudicates this handover process.
So there's a state chain. Yeah, there's a state chain entity which would help coordinate the transactions. So, if I basically want to give you my private key, I have to communicate with the state chain entity. But I want to emphasize the key thing: if the state chain entity is not cooperative or misbehaves, I at any point in time can pull my Bitcoin out, because I always have what we call a backup transaction, which is in a way a transaction that I can broadcast to the network to take my funds out. And then so it isn't censorship resistance, but it is, in our view, non-custodial. And I think that's one of the key things. So you need to trust the state chain entity to move funds around, but you don't need to trust it in that it's kind of securing your funds, which I think is one of the novel things about it.
Yeah, so that entity itself is never in full control. They're just there to facilitate.
They're an orchestrator, they're not a custodian, which I think is very key.
Okay.
And the biggest limitation is that we are moving private keys around. So my private key has, 4.1 Bitcoin. I can only send you 4.1 Bitcoin. I can't send you 0.1. So there's always a trade-off. But
yes, you have to send the full amount that is in that UTXO and hand it over. You can't send a partial transaction. So that's a limitation, but a big benefit is it's fully off-chain. It's virtually instant. And there are fail-safes in place should that state chain entity go down. So I guess, we'll come on to what you're developing using that technology, but, as a concept, if we're looking at things like side chains for clearing, Lightning for clearing, this is a potential other use case where you could see funds moved around between different economic actors instantly and securely, with the trade-off that it would have to be the exact amount of Bitcoin in the UTXO being delivered. Okay.
I think many people have reached out to us from the Lightning community. We're very much not competition to Lightning. You know, as you can see, we actually complement Lightning quite well. Lightning is really great for micro instant payments, but it has a liquidity issue. With a state chain, there is no liquidity issue because you're just sending private keys, but obviously you couldn't use a state chain to send micro amounts or certain denominations. And I think other groups have actually written some articles about how state chains and Lightning could work together. And once, you know, we've kind of finished our kind of like reference implementation and we're live, we're certainly going to look at that. And another key thing about state chains is that we focus on the private key area. So obviously at the moment we're very much focused on, on Bitcoin because that's where the market is. But we could, in theory, support any blockchain with a private key, which, as far as I'm aware, is at the moment every single blockchain. So we could support Ethereum, Libra, for example, CBDC coins, or whatever's coming down the pipeline.
Sure, interesting. So I guess, you know, with things like Lightning channels needing rebalancing and that potentially being an issue, it could be complementary to Lightning at some point where this would be another cheap and easy way of rebalancing Lightning channels, I guess, or something.
Absolutely,
like that.
yeah.
Yeah, absolutely. So that all very interesting stuff. So how are you using it in the first use case? Have you got a product which you're developing, which
Yeah, so we're kind of more or less code complete on the back end, but you know, CommerceBlock, we want to learn from our mistakes and make a very easy to use UI. So we're working at the UI at the moment, and it will essentially be a tool that will allow you to deposit your coins and then send them around privately. So we're hoping to be in test around January and hopefully in production sometime after. I mean, we're not going to release it until we're 100% sure, but we see it to be some sort of off-chain scaling solution, but with privacy as well. And I think there's a use case for that clearly, because, a lot of it would be depending on what the market says. And also at the same time, we are speaking to institutions that want maybe more of a closed door solution on state chains. So maybe not something that's so public.
Excellent. So when will that be released?
Well, everything we're doing is open source, so we're trying to have the code reviewed by the community. The back end, when I say we're code complete, we have a working operation, but it still needs to be hardened. And then at the moment, we're working on the UI. So we've released some screenshots of what the UI would look, because it's a different mindset. It's, you know, there's a mental thing here. You've got a coin which is not divisible. In a way, you're kind of going back to dollar bills and real money, because you're going to have fixed sets, and also that there is a timing issue. So there's a period of time where your state coin can't be taken by a previous owner. So we've started to send gifts out of the way the UI look and get feedback from users. So that's where we are.
Very interesting stuff. I'm sure there's a lot more we can talk about this, and there's going to be a lot more to discuss in the coming years, I'm sure, as a lot of these new solutions start to be rolled out and adopted. But for today, Nick, thank you very much for joining us and sharing your thoughts, and we hope to have you back again soon to hear some more.
Thanks, Paul.
Cheers.